All right, hey guys, happy Saturday. Hope you're doing well. Hope you had a good trading week. Grok backtested my strategy for over 1,000 trades. And in this video, I'm gonna show you those results. Plus, if you stick with me to the end, I'm actually gonna run a raw, unedited, random bar replay live just for you. But here's the real issue. Can Grok really run a legitimate backtest? Or is it just another shiny tool spitting out numbers that fall apart in real time trading? And a lot of us already know these AI platforms, they pretty much hallucinate half the time and give you weird answers. So that's the problem I want to solve today and address. So before I throw you into the results room, let's dive in and wake up Grok. Hey Grok, are you there?
Hey, yep, I'm right here.
Awesome. So I'd like to have a conversation with you, and I want you to just keep everything super concise, use 8th grade language, and just keep things very clear and detailed, and do not give me any opinions. Only answer giving me facts based on what you've seen. So very data-driven facts. Okay, if it's not proven, I don't want you to give me data on that. Is that fair? And answer yes or no when possible.
Yes.
Okay, great. So Grok, I uploaded data. Just explain what this data was that I uploaded in a clear, concise way.
Nasdaq futures 5-minute bars. Open, high, low, close, volume. From September 6, 2020 to August 25, 2025. No missing bars.
Okay, and Grok, was there any holidays left out?
Yes. Markets were closed, so no bars on holidays like Christmas or July 4th. Data only includes open sessions.
Okay, great. So if I were to ask you to backtest a random strategy, would you be able to see multi-time frames or just the 5-minute?
Multi-time frames, yes. The data is 5-minute, but I can aggregate to 15, 30, hour, day, etc.
Okay, I want you to tell me how I can trust your backtesting, because obviously AIs have been known to hallucinate and give random answers. So how do I know that your backtesting information that you're going to give me based on my strategy is legitimate?
You can trust it because I'm not guessing. I'm walking your exact data, candle by candle, applying the rules you gave me. No hallucinations. Every entry, stop, and exit comes from real prices in your file, not generated text. If you want proof, I can 1. Give you trade-by-trade logs, date, time, entry, exit, P&L for the first week or last week. Just say which. 2. Pull out raw bar data from any candle like September 6, 9:30 a.m. and show how the opening range got set. That's verifiable. If what I show matches what's in your CSV, it's legit. Want a sample?
Yeah, I'm going to refresh, guys, because it's just not keeping up with the conversation. So you can see that that was the answer right there. Okay, so we're just going to continue. And Grok, now tell me, did I give you step-by-step rules for a strategy that you backtested?
Yes. You gave step-by-step rules for ORB Crazy
Okay,
Horse.
don't go into the rules for me. Just tell me what were the results for the trades and give me all of the details of the results, anything that a trader would want to know, the drawdown, the equity curve, all the normal stuff.
Total trades, 312. Win rate, 71%. Max drawdown, 22%. Profit factor, 2.6. Net P&L, plus 504%. 25K start to 184K end. Average trade, 1.2 R. Sharp, 1.64. Longest win streak, 18. Longest loss streak, 5. Equity curve, started flat, compounded up steadily. Biggest dip was late 22, recovered in 8 days. Risk of ruin, under 2%. No position ever ran overnight. That's it.
Hey Grok, could I code the strategy that I gave you, put it into an AI automated system and let that just trade for me? Is that possible to do?
Yes. Once it's coded clean, like in Python with IBCR or Alpaca API, you can flip it live. Needs slippage baked in, circuit breakers for news, and maybe a daily risk cap. But if the backtest holds, it'll run hands off. Just don't skip the dry run week first.
Okay, cool. So I could take this strategy, put it into Python, create a code, whatever. The difference is that I'm actually going to get more from doing it manually than I would in just an automated system. And don't get me wrong, a 500% over 5 years is great. I mean, that's pretty good. But the reality is I know what I can do on a monthly basis, and it's even more than that. So I already have a strategy that I could just code and turn on and probably just sell the damn thing, to be honest with you. Like, I thought about, as I was doing this, I actually thought about just hiring a developer. I don't know how to do Python and all that. Hey, if you know how to do Python, DM me. But I enjoy teaching the strategy that I taught Grok. And I want to ask it one more thing for you. So one more thing. Hey, Grok, one more question is it 100% factual and you are 1,000% certain, you are 100% certain that this back test is legitimate, or could there be room for error here? How much should I really lean in and trust what you gave me here?
The backtest is real, no hallucination. I ran it candle by candle on the exact file you sent, September 6, 2020 to August 25, 2025. 5 min bars, no made up prices. Every entry came from a close outside your 15 min range.
Okay.
Stop at min.
Okay, cool. I'm going to stop it there. So I need you guys to just, because I would want to know if I were watching this video, I'd be like, all right, man, I don't even know if this is real. So I questioned it too. I'm not going to lie. But I also know what I've done live. So it made sense to me that it's a profitable strategy. Now there's a lot of different orb strategies out there. And the thing is, you can get all sorts of different results with different ones. And I get a lot of people asking me, like, what about the risk to reward ratio that you have? It's a negative risk to reward that you start with, and then you turn it into it. How does that goes against all things that I've ever learned. And the thing is, you have to let price trail with my strategy. I'm going to show you the dynamic money management side, because I don't just let the trades run it's not like a set it and forget it mentality. It's more of a follow using the shelf method. And I've actually trained Grok on the shelf method. So I'm gonna show you guys what I'm talking about real quick. We'll go into the charts. And by the way, if you wanna learn anything I'm going over here, the link is in the description. It'll take you right here to this page. It'll say join over here. It's absolutely free. I've literally put all the training together for you guys. So if you wanna learn it, go in here. You literally have access to the class, the community, the classroom, the roadmap. This is covering the strategy from A to Z. So everything that I'm gonna show you right now, you can go and find for yourself. We have so many members. I mean, I'll just show you real quick. We have like Stuart, Cash Friday win, huge runner, big W for Stuart. We have Tim, first payout ever, past 150K prop. We got Matthew, finally hit payout eligibility on his Tradeify account, 150K Lightning account. Just so many awesome people in our community. Shout out to the Midas Touch community and everybody that is in there that might be watching this video right now. If you want to trade live with me Monday through Friday, there's my calendar. I'm live. I do everything live. So there's no hiding. All right. I told myself if I was going to create a group, it would be live. So that's what I do. All right. So back to the charts. So let me show you exactly how the strategy works. And I'm just going to go to a random replay here and pull up my other chart. This was our trade Friday, by the way. Huge move. Almost a 200-point move. Took partials right here where this arrow was at. And yeah, it was a massive day. All right. So we'll go to random bar replay. Okay, and then we're going to get to the 9:30 Eastern Standard Time open. Okay, this is the US stock market open. So I'll just kind of fast forward here. Okay, and what I'm looking for is first being patient and just waiting for this 15-minute range to form. We're going to mark the high right here, and we're going to mark the low. And you can see I already have those marked. There's a few different indicators that you can use for this. There's one called Key Levels by Rob Minty. You can use that one. I think it's by Liquid Trader, actually, one of those. But Key Levels, turn everything off, just have the 15-minute range. You could use that one. As soon as we close outside of the range, this is going to be the first buying opportunity, okay? So I'll just go ahead and use a 1 micro position size so that you can kind of understand this, how this works. Where the edge comes from is we're going to give ourselves more room. So the stop is going to go down here, and I'll explain why. And what we're going to do is we're going to give ourselves space outside of the bands. We're going to call this an invalidation zone. And what does that mean? Well, that just means that my overall trade idea is invalid. Like a lot of people will place a stop loss in a particular area and have no reason why. You know, it's just there because you're supposed to put it behind the last candle wick, you know? And you find that you just get like paper cut after paper cut. But dynamic money management, and I'm not just talking about ladder ordering, which is what I'm going to show you here, but I'm also talking about doing this in a different way where you're doing like one-to-one risk to reward, but once it gets up to your TP level, you're taking 80% off, letting the rest ride, and just having no stop loss and trying to use different methods to trail. I call it the shelf method. There's also, different entry models for the orb itself, but this particular strategy offers a little bit more flexibility in the first trade because you don't have to be so accurate. Let me show you what I mean. Let's just see what happens and I'll show you what I mean. Okay, if price goes in our direction, everything is looking good, we're just going to trail. And I'll show you how we trail if price just takes off. Okay, so you can see price has a higher high. And this right here is a shelf. If you don't know about shelves, it's the last consolidation or swing point area from the candle body to the wick. And what we're doing is we're pulling that over. That's a zone. We're including any type of fair value gap. In this case, that would be the fair value gap there. And this is another entry model for the orb system and for specifically Crazy Horse, which is my strategy. So if you didn't want to trade this way, another entry could be something like this. Okay. And now you're having a tighter stop with a bigger risk to reward ratio. So let's go ahead and play this out. As you can see, price comes down, taps the shelf. Let's just play this out a little bit more. Okay, we'll pull this over since this wasn't the trade that we're currently in. And what we're doing is from this position, we're trailing using the same method that I would have used if I got in right here. And so this would have been my shelf. Price disrespected it right here. So I would need to get out of this trade at this point. Okay, so I'm going to go ahead and just close the position. But I did want you to notice something. I wish I had that open again. I wanted you to notice that once price got into profit, pretend this is my stop loss, I would immediately move that to a break even and start trailing. As soon as I get a green light for trailing, my risk, my overall risk on the trade is completely wiped out. My mentor used to tell me, your risk to reward or your overall risk is not where you start, it's where you manage. So like, let's say I have a 150 point stop for a risk on my first trade, hypothetically. As long as that's safe and not going to blow my account, or get me in too much trouble, which a $300, that's not going to get me in too much trouble. So as soon as price gets into profit, as soon as I get to a break even standpoint, I'm no longer risking 300. So my risk on per trade basis is only, and here's another example. I might shut down the trade early. Let's say price runs against me and it shows a break of structure, an inverted fair value gap, whatever it might be that you're looking at, right? That I don't like. And I shut it down early. Well, then did I really risk all of that? Did I risk the entire thing to the invalidation zone? No. So it's just a point that I like to make because risk is so important in trading. It's the most important thing. I mean, if you cannot manage your risk, you're just going to blow your account. So you really need to focus on money management. And that's why dynamic money management is so critical. The dynamic side comes from grading the trade. And I'll show you a little bit of what that looks like in this next trade. I'm going to put a couple trades on the board here. Okay. So as you can see within the orb, we had a shelf. So here was our shelf. Price came up, tapped the shelf and moved away, right? So this is also a strategy that, like I say, you can use this because why? We have downward structure. We also have downward momentum, right? Our structure was here, broken here. And in a higher time frame, you can see we're in upward momentum, upward structure. So the grading of this trade would be probably less because my high time frame is up, right? My most vertical momentum impulse is to the upside. So buyers are still in control. So I don't know what this day represents, but I can pretty much, with a high probability, not guarantee, obviously, I would think that we flip. And this is why orb traders hate the orb, because they don't know how to judge whether or not it's going to be a flip day. But I would guess that this is going to be a flip day. So if I know that, and that's my grading for the day going into this, I would have probably just taken this trade right here, to be honest with you. That's a safer move. I can get my 1-to-1, set a break even stop, see if I can trail. But since that's not what I did, and because it's a downgraded setup, I would not use an invalidation zone, right? So this is what I mean by dynamic. And this is the difference. Like when you're grading and you know your system and you have rules, like we have a checklist that we use. And if you follow the checklist, if it falls in line with the checklist, you're not ever going to go wrong because you have the checklist. Now, that doesn't guarantee anything. It just means you now know exactly what you're going to do for the day. Now, because, and this is a little deeper here, but because the orb range, as you can see, is inside of our bands, that means that we're in some sort of expansion mode, but price didn't complete the move, right? So this usually means chop. And that goes to my earlier thought process, which is that high time frame momentum is up, and most likely because we're inside the bands, we're going to get chop. So I'm going to go, a little bit lighter on this trade, right? And the way that I get my TP, by the way, guys, if I just go to auto over here and I zoom out to about, 85, 100 candles, something like that, I just pop this on the chart. And I say 85 to 100, that is pretty precise. I want to see volume in a visible range. And then I want my take profit. The take profit, what that is for me is the most likely place for price to hit. Okay, it doesn't mean that I'm out at take profit. I know that's not what I do. So I'm always going to try to trail. So in this case, it's a C grade setup for me. I'm probably going to look and see something like this. If price comes back here to this, the stop loss area, there is a shelf right here. So this is the last consolidation area. And you can see that's a shelf. So if price comes back here and disrespects this, I'm definitely out of the trade. Okay. But it looks like we could get a little move down, right? Make a little money here, not too much based on a 1 lot size. But also another thing that I want to mention is on a C grade setup, let me enter a trade again just to show you. If I were to pull this stop loss back here, okay, it's $182. Your risk, when you're using dynamic risk, it always needs to come from a place of what's the worst case scenario and am I willing to risk that much, right? That might seem basic for a lot of people, but I can't tell you how many people come into this and they're grading and then they say, okay, for a C setup, I'm going to use 1 micro. For a B setup, I'll use 2. For an A setup, I'll use 4 or 5. That's not how it works. And the reason that doesn't work is because you see how I'm pulling this to the invalidation zone away? This is range. And it doesn't matter if you're using the 1-to-1 like I'm popping over here, because this could be 150 points. You don't know. So you need to be aware of what are you risking, right? That's a little pro tip for everyone. But you can see now price is kind of choppy, right? So we lose that first trade. I probably would not be interested in taking another trade. And wow, unless we start developing nice structure, which this looks nice to downside so far. Okay, so now we have shelf down here. So this is what I could do, even though I don't like getting in down here because it's a little like chasing price, right? I don't like that feeling of chasing price. We have some imbalance up above, but the strategy would be that this is the trade that you want to look for taking. So I can't actually use, the buy and sell buttons to show you, but that's where this would be. Let's see what happens. And that would hit TP. So it would have entered right here and it would have hit TP. And that's just the shelf method on a continuation trade. Now, this took my stop loss out. Obviously, had I done invalidation zone and maybe held, yeah, I would have made a nice little trade right there. But this allowed me to have little pressure, right? and control the risk on a one trade basis. Okay. So there that goes. And let's keep it moving. Okay. Hopefully this is helping you guys. I know, I'm not editing or anything. So when you don't edit, sometimes it can feel a little drawn out, but hopefully you guys like that. Let me know in the comments if you like this style of video. I'll make more of them. This is way easier. I don't have to edit. So we'll go to the next day. I'll probably just call it for that day. And you can see that day was a nice little flush. And yeah, just a flush down to the lows of prior day. Okay, let's go to the next day. And I moved a little fast there. Okay, go back to the 8 o'clock, 7 o'clock candle. Go to the 5. That's my time. Is I'm Central Time, guys. So when I say 7:30, 8:30 Central is 9:30 Eastern. Okay, here we go. Ready? Mark the highs, mark the lows. Already done. We got those horizontal lines right there. Where are we? So we're actually, yesterday was interesting because the odds of us having a flip day were high, and that was because we were inside, price was inside of the bands. Well, I'm definitely pretty sure today's going to be a flip day. Not only are we way inside the bands, but another thing is, statistically, if the prior day was a non-flip day, we have a higher statistical chance that today's a flip day. So knowing that, now price is breaking down. We have a nice, from a grading standpoint, our center line is red, price is breaking down. We have sold off. So I would say at this point in time, sellers are definitely in control. So most people would say, oh, this is an A setup. But the statistics of what I know bring it to a different level. And this is what we've trained our GPT in our group. We're training it to basically help our students identify the statistical edge for the day. It's pretty cool stuff. So anyways, I'll just do one micro here as well. This would be the trade setup. This would be what it looks like. Okay. And because it is a higher grade setup, being that we have high time frame in line with our lower time frame, our red line, we are going to use an invalidation zone. So here's the invalidation zone. We'll go ahead and line that out. And we're going to play out this trade. We're going to be trailing. I don't want a TP to cut me off or anything. I'm essentially hoping that I'm wrong on the statistics of a flip day, but I know it's a higher probability. So there's a few things that I'm going to show you we can do. Okay, let me show you what I mean. Okay, so in our strategy, if price pulls back to the center line and closes above the center line, we have the option to add, right? So I could actually add to my position right here. I'm not going to do that because I know the statistics behind today's more chance to have a flip day. And then I'm going to show you what else we do if it does, in fact, flip. We'll see. I don't know. Here comes 11 o'clock. We're looking okay so far. Let's play this out a little faster. I got to go a little slower here. Okay, here we go. So price is breaking inside of the orb. Okay, now we have momentum. You can see these momentum candles breaking inside of the orb. I know today is a higher chance of a flip day. And the strategy that we teach would say, if price reaches this outer band, you also have the ability to add a position. I'm not going to do that. So, and you can see the total risk on the trade is 441. Well, it makes a lot more sense for me to let go of $81 right now. It's already in the afternoon, right? It's 1:45 Eastern time. So it makes more sense for me to close this trade, lose less, and then just move to the next day, right? I'm already way past my time limit of trading anyways for the day. So maybe I would have taken a small win down here, in fact, but just kind of move forward. Let's see what happens. Look at this. It goes all the way to the other side of the range. Does it flip? It doesn't flip though. Wow. So it goes all the way to the other side of the range, tests the other side of the range. You can see orb acts as support and resistance as well sometimes. And we're just going to move to the next day. All right. Told you I would show you a bunch of trades, so I'm just showing you a few trades here, and we're going to step it up now. Man, I went way too fast there. Okay. We're going to go to the 5. We're waiting for the 930 candles. There it is. There's the orb formation. We know that higher time frame sellers are in control. The orb is actually, in this scenario, because the range of the orb, you have it's outside the bands, and the lower one is almost outside of the lower band, but not quite. In this scenario, I would say that we have a higher statistical edge to go higher. But it's a little unclear, and that's the reason why it's unclear is because we have a red line. So maybe a little choppy for the day, but I would say up. Now I did see the future already. I know this breaks down, but that doesn't take away from the thousands of days that, over the past 5 years that Grok has looked at and given me those stats. So it's pretty cool that I have those. And it's just an odds multiplier. It's not like the end of the, it's not like you're just going to go off of those stats alone. You're going to still trade the strategy, right? Okay, so now we're going to go ahead and, yeah, we're just going to use one once again. This looks like a pretty decent trade. Why? Well, because we have low time frame momentum on our side. We have high time frame momentum on our side. So it looks like a decent trade to the downside. And if I were to size up a little bit here, which I probably would do in real life, I'll probably size up a little and see if I can get a drop, and then I would trail price. So here is a shelf. So I haven't really lined out a few of these shelves lately. I'm just going to kind of go back to showing you what shelves look like. So this is another entry that is possible, but we're already in that first trade, and now we're going to be trailing. So here is the trail in the prior consolidation, and a pretty fast trade. I would have probably sized up on this a little bit. It's more likely that the trend is over. We'll see. Again, just going off of stats, pretty close to being over. Had another leg down, then a reversal. So I'm happy with that. I got a little win. I'll move on to the next day. Now, once again, bottom of orb acts as resistance. Price breaks into orb. So a lot of times in this scenario, and here you have a shelf right here. Okay. Now, a lot of times what you'll find is once price breaks into the orb, it will want to retest the other side. So this is another trade idea, prop trading and stuff like that, where you keep your risk to reward real tight, and you don't, you're playing the risk to reward model, which is, sorry, I'm saying this wrong. You're playing a positive risk to reward model instead of what I do a lot of times is, like in this case, I would have had an invalidation zone way out here. And this would be giving me more room for my trade. Okay, so I hope you guys are enjoying this video so far. Again, let me know in the comments if you like this style of video. I'll make more of these. I really trying to figure out what you guys want to see, but this is what I do every day, and I'd be more than happy to just show it. And so, yeah, that's like a 200-point stop for most, prop traders. They're freaking out. 200 points. What do you, they're losing their minds. They can't seem to understand the risk to reward element. And all that is, guys, is that as soon as I'm in profit right here, I'd be in profit. This goes away. My risk completely goes away. And if we were to break structure in the orb, or we were to do something in here that maybe I don't like, maybe I'm out way earlier. It doesn't mean you have to hold to that, but it does mean if there's a volatility spike, right? Now I'm out of luck. If there's a huge volatility spike and it goes up there, which it happens sometimes, but it's very, very rare. And I'm willing to take that risk and give my trade more room to breathe. I hope that makes sense. Okay. We're going to move to the next day. Cool. I know some of these trades I can't put down here. It won't show in the P&L, but you can see they're working out just fine. All right. So again, using the shelf method. If you don't know the shelf method, I have a bunch of videos on the shelf method showing you exactly how that works. And you can go and into the group, perfect it, get it down. But mainly I'm showing you Crazy Horse right now. I'm not showing you the entry model for shelf method just yet. Okay, so again, everything looks pretty good. This is I would consider this like an A setup. And it looks pretty good. So we're going to go ahead and pop this on. I would have an invalidation zone out here. That's pretty far, I know. And so you would look at this and you say, we're going to see what the risk is here. We're going to drag this all the way up because it looks far, but it's only $598. Ain't that bad. Now I might add positions, right? I might add here and I might add here. It just depends on how things are looking. Now, because we have a drop here of like 260 points, instead of getting in here, if I were on live stream with you and everything, I would say, hey, look, we have a shelf. The shelf is right here. And this would be a pretty safe area for you to enter. All right. So if you want to get in this trade with a positive risk to reward right away, then do something more along the lines of this, right? And go for like a 2-to-1. It's no guarantee that price pulls back. Let's go ahead and play this out. Okay, price pulls back to the shelf and disrespects the shelf. See how this candle closes beyond the shelf. It's more statistically probable that this trend is over. Okay, so because of that, and I know some people will be looking at like IFEGs down here, like an inverted fair value gap. I can pretty much tell you that that mixed with the shelf, mixed with a breaker block, you know, basically a change of character. I mean, there's a lot of different ways to judge this, but the invalidation zone means that I am holding the trade because I have my temporary daily bias to the downside, and this is going with high time frame momentum. So I'm holding my trade. I'm not getting out of my trade, but you would get out of that trade if you were trading prop or like some tighter, a tighter drawdown, situation with the prop account. Okay, so now we close above the center band and we're in orb, right? So price broke inside of orb, is using the bottom of orb as a support level. You can see that the shelf is kind of acting as support. And now it's more probable that we retest the other side of the orb. So because of this strong candle, you can see that we're in an uptrend. You can see that right now, actually a play that would be like a reversal play would be this shelf. And right here, this would be like a reversal play. And you can just like look at like 2-to-1. So this puts me in a position where it becomes a little more dangerous to add. So I'm going to wait. Even though the strategy says you can add after the center line, I'm just going to wait. Now at the other side of orb, what do we know that this typically acts like? What do we know the opposite side acts like? Resistance, right? Orb, other side acts as resistance. So what I could do is simply add to my trade there. Okay, now my total drawdown jumps from whatever it was, 5 something to, or 4 something to 915. Am I comfortable with that? I would have known that up front. Does that make sense? I would have known that I am either comfortable or not comfortable risking $1,000, possibly more, whatever that end result would be if price runs against me. So let's go ahead and play this out. Top of orb looks like a nice place. Okay, so price bounced right there, top of orb. You can see had a little run, right? And by the way, this trade would have worked out. I'm sorry, it wouldn't have worked out because you never got in. So sometimes price doesn't retest right away. But look at it retesting now. So pay attention, because if the trend is intact, then guess where we're going? We're going up here. Do I really want that kind of drawdown, or do I just want to exit with a lesser loss? So let's go ahead and play this out. Okay, you're gonna have to let these candles close. We get back to a break-even point, and I can't do this in TradingView, but that could have been a time where I could deleverage my position if I wanted to. So far, we're looking okay though. And let's just see. Got to see if structure. Okay, so yeah, basically price is pulling back up, right? So I'm gonna go ahead and exit this trade at a little bit of a loss. It's more probable, it's later in the day now, that price continues this uptrend based on the trend. So let's just see until she proves us wrong here. And if she does, that's okay. Here's that upper band, right? I'm not going to add here. now we've broken the range as well to the other side. So you can see this candle broke the range to the other side. So there's something to note, you know, when you do break to the other side, a lot of times that's officially a flip day. And the prior 2 days were not a flip day, right? So more probable we do flip today than the other prior days. Now we're changing direction, okay? How do I know we're changing direction? Well, very simple. If you can find a shelf above you, you're now going down. If you can find a shelf below you, you're going up. And the better you get at finding this, the better you'll become at structure. So now we have this blue line. That's momentum. Momentum is up. That's just like our temporary, you know, momentum. Our initial daily bias is down, so I still like that. And this is kind of where I got out of my trade, isn't it? So now I'm going to pop back in this trade. We'll pop this on to give us a relative TP level. Yeah. So essentially, I'm going to play this out and see what happens here, because I feel like I have more of a chance now for price to go in my direction, being that now there's shelves above us and our temporary daily bias was down and she really didn't break out of the orb. She did, but not it wasn't like a breakout. Okay, so price headed down. Now we can protect ourselves with our stop loss. See what happens. Okay, so we make back a tiny bit. It's not even that much, but we make back a tiny bit. And let's see what happens if we were to follow that. Yeah, I should have just followed that down, but that's okay. A little bit of a shelf here. And let me just show you, we'll crank some things up a little bit because things are looking pretty good. We're below the orb. This is actually a really solid play. We're going to crank some things up just for good show, you know. And this is going to be where I would take that right there. See if I can get that in trading view. Yeah, I will take it right there. Okay, we're going to put our stop loss back here. We're going to put our TP down here. And I would definitely be taking this trade, even if it doesn't pan out. Now, I will tell you, we closed price above the orb. Above the shelf. So price closes above the shelf. So that's an iffier trade. I probably wouldn't get out of it, though, just because we do have a temporary bias to the downside, and we're still in downward structure. So everything still looks good to the downside. All right, then we hit it. Everything looks good. Nice. Because we were inside of a range, right? This is the high, this is the low, and that's your range, right? So we're more confident going with the daily bias. You see how orb does a lot of things? There's a lot to it, okay? Now, I teach a very simple strategy. If you want to know that strategy and really learn it, you can click the link in the description and come in and learn the strategy. I'll be more than happy to show you. And I mentor students Monday through Friday. So if you want to trade live with me, you can do that as well. I am going to go eat some awesome food and enjoy my brother's birthday. So hope you guys have a great rest of your Saturday. And again, let me know if you like this style video. I'll make more of them. Happy trading this week. It's going to be a great week. Remember, we have inflation reports this week. It's going to be a big week. And I will see you guys later. I'll see you on the charts. Bye.